welcome to the Trading Bell. Now we have sat right here at the office of Tomulwa. He's the Group Managing Director of Liaison Group, to just not only understand about their product diversification, but also talk about Linzi Sukuk, which was the recent bell ringing ceremony at the Nairobi Securities Exchange. Tomulwa, welcome to the show.
Thank you.
Beautiful office you have here, and thank you so much for having us.
I wish I could spend some more time here, but unfortunately I never find the time to stay in the office. I'm out there in the bush with my clients.
With your clients?
Yeah, but thank you.
Anyway, we have to go to the clients, definitely. And for the sake of our viewers, maybe before we define Liaison Group and what they do, let's talk about that latest move we saw, because you were there and you addressed the gathering there, business people, investors, the president and everybody else, and you rang the bell with the president there, Linzi Sukuk. Could you enlighten us? What exactly just easily happened on that day?
Oh, great, and thank you for having me. Linzi Sukuk was our Liaison Group response to supporting the infrastructure gap which we face in Kenya and Africa at large. So we went out there with a call to support the institutional housing projects by government. Our initial thinking that was we could do a conventional bond. But with the current interest rates looking upwards, 16 to almost going to 17%, we were not able to structure any conventional bond which would give a return to investors to support the institutional housing program. So we had to look more innovative ways to think differently, and we found ourselves looking towards Islamic funding. Now, the good thing with Islamic funding, it's not interest-based. It is dividend-based. And it's ethical-based. So around those principles, we were able to structure a sukuk, which is Islamic funding model, against which the investors, who are basically Islamic investors, Islamic finance investors, would then receive a dividend out of the returns from our institutional housing program. So that fitted perfectly well. And we're very, very proud of that successful issue. That's all about Sukuk in basic language.
For the sake of our viewers, and really appreciating that this is ethical financing courtesy of the Islamic way of doing things, one would be asking me, I'm not Muslim, am I allowed to invest? Maybe that's one of the questions they may ask. And I also wanted to couple it up with, is this also a way of hedging from the volatilities of the interest rates that we're seeing here and there?
Yes, it is actually. First of all, the Islamic funding, just like banking and other Islamic products, are actually open to all of us. I would say is if we need to go out there and actually educate more Kenyans about Islamic funding, it is more stable, it is more ethical, it is more assured, because you actually receive a dividend. So if the program, like any other business, is well structured and all the downsides are covered, you are actually sure to receive a dividend. And most of the time, the return on the dividend, like for our bond, is assured at 11.13%. There are actually very few businesses who would return a bottom line of 11.13%, which is a very decent return. It is open to all of us. You could actually invest in it. It is quoted in the USP, so any of us would invest in that. So yes, it is open to all Kenyans and to the internationals as well. The other question you ask is about the volatility of our conventional funding. Yes, I think for us it's the best way to hedge. Because when we are looking, I mean, if I may just digress a little bit and look at our treasury bonds, for example. Those of us who bought the treasury bonds with a return of 13%, it was really looking very good. But now, with 16-17%, you can't sell. If you try to sell, you're at a loss.
You're at a loss.
But if you had bought an Islamic funding instrument at 13%, possibly you'll still be on your 13%. So it is a sure return, less exploratory. So I would encourage ourselves to look that way.
Okay. Fair enough, Tom.
Yes.
All right. You're quite bullish. I mean, listening to you and the confidence you have in the market. And one would wonder, Tom is not worried like other people. I don't know. First of all, what's driving this?
We are basically in the long game.
Yeah.
And we've been around for the last 40 years. 40 years is a very long time.
It's quite some time.
And we are looking forward to the next 40 years to do different things.
Yeah.
We started as insurance, risk and insurance business, and we also are involved in pension administration business. These two kind of businesses, from these two kind of businesses, we got our long-looking clients like ourselves. They are looking for investment horizons beyond the short term. Yeah. And so from our capital markets business, we are able to find now value for them in the capital market space by way of going to infrastructure bonds, infrastructure instruments, for example. And that's why we are looking at our bullish idea of funding the infrastructure gap. You know, the opportunity we are looking at is basically the infrastructure gap we have in roads and rails, infrastructure gap we have in housing, water and sanitation. The estimate at the moment per year is about $2 billion US. And we will not basically scratch the surface by just having even 20% or 30% of that kind of funding at the very least.
Absolutely.
So like I said during the show, we are missionaries and we are very bullish about our mission.
Excellent. Excellent.
Yes.
Do you have some specific, if I may call them that, issuances that you think these ones we shall still push and offer as Liaison Group?
Yes, our Sukuk was actually a pilot. It was, in our thinking, a proof of concept. Behind that, we have lined similar issues in Sukuk for institutional housing. But we also want to focus on social bonds for education. Education in this country is key. The government is looking to fund education to the tune of 600 billion. That cannot be done in the exchequer. So as a way of giving back here at Liaison Group, we are thinking about social bond built around the endowment philosophy, where possibly there will not be bigger returns than there would be in conventional or even our latest Sukuk, just to try and support the government initiative in education. So we are focusing on education, we are focusing on housing, and we are focusing on green water and energy. So we have a pipeline of issues in all this social development for our country. So we are out. We've cut ourselves a good line of pipeline to think about.
Sure enough, and want to take a break right now. We'll be right back. We're speaking to Tom Mulua himself, quite bullish about what's happening. We'll take a break. We'll be right back. So welcome back to the Trading Bell. We're speaking to Tom Mulua, the Liaison Group MD, quite bullish. And I would like people to understand a little bit about your offering as Liaison Group. You're quite spread in terms of your tentacles. And I wanted to ask you the question of your comprehensive service offering as Liaison Group. Quite wide in range of services. Could you mention them a few and why?
Oh, great. Yeah, we are basically a non-banking financial services organization regulated across our areas of jurisdiction by the Insurance Regulatory Authority, Retirement Benefit Authority, and the Capital Markets Authority. So the only business we are not involved in the financial sector is actually banking. So our offering in risk and insurance spreads from insurance broking to reinsurance broking. Our offering in pension administration is geared towards administering pension schemes. So we are custodian along with the trustees of pension schemes. Our offering on healthcare is basically on third-party healthcare administration. But the subject which is very close to us at the moment is investment advisory. So we are regulated by the Capital Markets Authority as an investment advisor, and it's against that business that we are issuing our sukuk. And it's basically creating value for our insurance and pension clients to find avenues of alternative investment. So we have found that as our niche opportunity to create value for our clients is at the same time help to support our socio-economic development as a country by way of automating our funding towards infrastructure development.
You would agree with me that customers of today want to have seamless way of operations, especially integration, that I don't have to look for insurance here and then go save up there and all that. How are you ensuring that you have integration of all your products to have this seamless ways for customers?
Happy you ask that. I think I possibly am a baby boomer, but I'm supported by Gen Zs in this organization, and we've created a very vibrant electronic system. All our service offerings are actually online. So we've created a concourse of all our service offering online, where we are able to serve our clients electronically, be it risk and insurance or pension or healthcare, or even our advisory business is also onboarded on our online platform. It's a way to go. There's no two way about it. The customer of today wants to get this service delivered online. You can actually buy insurance on our online platform, and you can also make your claim online. You really don't have to visit any of our offices across the region. And you can take me on that one.
Yes. I love that. Let's take two of your products that are on your offering. I think I'm looking at healthcare and insurance. Two things that I've seen across the sector. When we talk about insurance penetration in this country, we still bury our heads a bit because there's a chunk of work to do. And healthcare as well, from the government side to even the private sector. When it comes to private sector, we're talking conversations on affordability and accessibility as well for some of it. I don't know, I'm sure these are things on your desk as well. What are you seeing as Liaison Group, and are there possible solutions you see of us getting out of this quagmire?
I'm happy you asked that because it's about trust. We have a huge trust deficit in financial services generally, apart from banking. Thanks to M-Pesa, I think the financial services sector, the banking sector has been given a shot in the arm. But for the others, we have a huge trust deficit. The consumers do not necessarily trust insurance because of historical challenges to do with the way they were served before. Previously, insurance was sold by teachers. Not that my mother and dad were bad teachers, but simply because they didn't understand it. So they were mis-selling before, and that translated to a huge trust deficit. Same thing with healthcare. There has been a trust deficit in healthcare. Not deliberately created, but just because the service offering has not been as transparent as it should be. So that's where we need to start. Players in this field need to create trust, and the only way to create technology will actually create trust for us. So from the boundary 2.5% insurance penetration, the only way to beef up that is creating trust, making sure that services are offered transparently, and the promise given as you buy this service is actually delivered as promised. So there's a lot of education to back up that.
I want to touch one more area that you're invested in, and that's on your pension solutions. One of the other things that I've seen as well, it has been marred with a lot of effects. Government policies come in place, and depositors' checks feel the pinch. Private pension providers, which you are one of them as well. I don't know how you navigated this or how you're navigating this. I just wanted you to touch on that as well. How are you faring on? Is it on a challenging scale, or are you still bullish that things are still gonna, fly off?
Yeah, I think here we definitely have just to keep pushing the envelope as hard as we can, because there's a direct relationship between GDP and saving.
Yeah.
And unless we save, we definitely are not going to be at the levels of GDP we wish to have.
Yeah.
So the challenge is we are competing for that small coin with the cost of living.
Yeah.
So as long as we keep pushing the cost of living to go down, we shall be able to find something to put on the saving rack. But that is not to say that we wait until we've got something extra to save. There is never going to be that day. We need to push the education to savings to make sure that Kenyans do appreciate the need to have the saving. It is said that at least a third of your income should go to the saving. But even if not a third, at least a fraction, however small it will be, should go into savings. There's a compulsory pension drive by government, and we just hope that it will turn from compulsory to compassionate, that we may be able to save at will. The only way to inspire saving at will is to make sure that the returns on those savings are decent enough to at least inspire and motivate saving, especially with agencies, because for them it is live now. So we need to generate saving plans which allow them to use part of their savings as they save. Because the mentality of I save to use the savings at retirement is actually what is killing the saving campaign. So we need to have products which assure or guarantee that you could actually utilize part of your savings for holidays, to buy things you like, possibly, so that you feel that you've got access to this money. It is actually you are on your other pocket. So that's the challenge we have to give ourselves. We need to, cleanse ourselves from the mentality of you're saving for retirement. Retirement, they want to retire now. It's now. Yes.
I know there's always a temptation when you see a lump sum and you're like, what am I doing here suffering? And you can see it. Already, quite some work to be done. And finally, as we come to a close of the conversation, your unique proposition, tourism and risk solutions in that sector. Curious to know actually how this is still a niche on your end, and what are the unique challenges in this particular sector, and how do you address them?
At Liaison Group, we are very passionate about tourism, and tourism is very close to our hearts because we believe tourism, it is one sure industry for generating employment, for example. We are endowed as a country with natural resources like nobody else across Africa. From the ocean to our mountains, to our game park, to our people, to our weather, even the politics we have. I mean, so I think it's a space which is an opportunity for us, and it's a space we want to promote. And our risk and insurance business is very clear that we need to protect our investors in tourism sector, because we feel it is one sure industry to create employment. The whole tourism ecosystem generates employment to the tune of maybe 1 to 10. For every dollar you invest in tourism, you could be creating almost 10 jobs. So it is an area, it's a space where we are very passionate about, and we need to showcase that. And our bias towards that is at least to encourage most of the Kenyans to look inwards towards tourism. There's no need to create other industries while we really have got one low-hanging fruit in tourism. So we have specific products for tourism on our own, and we wish to invest much more in that space. Even as a business, we are investors in the tourism sector.
Yeah.
Yes.
I love that and how positive you are about how much change tourism can do to our economy. And thank you so much for that. I have to ask you this final question because there's a lot of innovations popping up. You're seeing we're in the advent of AI and all those kind of things that are popping up. And I don't know what you're looking at in the future. From yourself, what is it that you keep thinking and saying, we need to start thinking big time about what's coming?
Yeah, I think that is the next landmine. I mean, that's the next gold mine for us. The area of technology, it's where the opportunities will be.
Okay.
Fortunately for risk and insurance is the area as a business we need to think more about. The risks in that area could be very catastrophic.
Yeah.
So our teams in risk management are looking to advise our clients on risk and protection on technology risks. Crime in technology is massive. We just read the other time and we saw it. The world almost collapsing in the area of transport.
I know, yeah.
We are looking at what claim will come. That possibly will be the largest insurance claim we have in cybercrime.
Yeah.
Or cyber professional indemnity.
Yeah.
Because somebody will have to bear responsibility for all that inconvenience. So that is a yellow card to risk and insurance that it could actually get worse.
Yeah.
So it's an opportunity for risk and insurance business, and we are keeping our eyes very open. But there's also an opportunity for investment. We possibly, by teams in Liaison Capital, who are the investment advisors, could be looking to issue a bond in that space. So, so we'll keep looking at that huge area of opportunity to see what comes out of it. Same thing with climate. Climate is another huge opportunity. The climate discussion going on around at the moment is an opportunity in the financial services sector, and we're also looking at that area in our risk and insurance business to see how we could cushion investors in that area. And more interestingly will be the climate bond. We are looking at opportunities of issuing green bonds, which definitely will catalyze our capital markets. So that's why we are very bullish. Then, the only thing we have limited is time. So we have to create it. Yes.
I love this. So the bell is ringing soon.
So
the bell is ringing soon, right?
The bell.
At the exchange.
Yes. The bell is ringing. We are looking for 4, 5, 6 of this.
Wow.
Yeah.
Tom, thank you so much for your time.
Thank you. Thank you.
So there you have it. Tom Muller, quite bullish about the opportunities that he sees and the markets that should be coming forward as well. So you better be prepared for this. Thank you so much for your time. I leave you now with the markets.